Hello everyone, welcome to this webinar today. Crowdsource funding equity raising gives accountancy firms an entry to advisory services. I think you're very interested, and thank you for coming to this webinar today. We're going to look first of all at the top 100 accountancy firms embrace consulting services according to the Financial Review Top 100 Accountancy Firms Review for 2019. Many of those firms have indicated that they are expanding beyond traditional audit and taxation work. What are you doing in your firm? They're doing this because they perceive that there's higher margins in the consulting work, and also quite a number of these firms have embraced the concept of supplying chief financial officer services for their clients. What are you doing? Have you looked at chief financial officer services? So where are accountants headed? This survey has indicated that accountants are moving more and more towards creating what the Financial Review has referred to as a respected GP status. One's own financial GP, which potentially refers clients to an in-house expert or an external professional expert. I think it really confirms that accountancy firms are headed towards supplying all-round chief financial officer services for the benefit of their small business and medium-sized enterprise clients, which is where the majority of firms who are watching our videos, clients would be from. So it's multi-services to your clients beyond the traditional compliance services. So let's look at crowdsource funding equity raising, because I think this is a conduit to business improvement services, how you can offer a wider range of services for your clients. And also the introduction of virtual chief financial officer services, using today's technology and software and the skill level. And many of you have outsourced some or a fair bit of your taxation services, or the preparation work, the bookkeeping work. This gives you an opportunity to be supplying a wide range of commercial services to your clients. And in lots of ways, they are well embraced by what has to be done to get a client ready to be able to utilize crowdsource funding, equity raising opportunities that are now available. So who are the clients who are going to be seeking to raise capital? I think most of them are going to be, initially at least, clients of small accountancy firms and medium-sized accountancy firms. Most of them will not be with the top 4 or even the top group of the top 100 firms. They'll be scattered all over Australia with small to medium-sized accountancy firms. I think your challenge is to be able to provide a range of commercial services which will enable your accountancy firm to retain those clients. And for many of you, this will give you the opportunity to grow with your clients as they request or need additional services. So whether they remain with you is probably going to depend on the response you give to these clients if they ask you about crowdsource funding equity raising, or the proactiveness that you're showing by your website, your communications with your clients, as to whether you are interested in performing services beyond taxation. So let's look at the clients who might be interested in raising capital. Right from the outset, let me clearly state, I know that every client is not going to be interested. So the clients will need a vision and be very keen to implement some new strategies within their business. And this is an opportunity for you and your team to grow with these clients, to be able to offer them these new services. And we can learn from what has happened in other countries. We have not led the world in crowdsourced funding equity raising. In fact, we are one of the very slow starters, the slow adapters to this new phenomenon that really has swept the Western world. USA, Canada, UK, New Zealand, various countries in Europe, Singapore, have all had crowdsourced funding equity raising in one form or another for the last 7 or 8 years. And finally, Australia's playing catch up. So we've had 18 months of this new service. The first 10 months, you had to be an unlisted public company to avail yourself of crowdsourced funding equity raising. And now we have had 12 months. So it is a little bit more than 18 months that we had the opportunity, but we've now had a full 12 months of crowdsourced funding equity raising being available for proprietary limited companies. These other countries that have been undertaking this activity for the last 7 or 8 years have achieved significant capital raisings for the benefit of small businesses and medium-sized enterprises in their countries. So we all have an opportunity to learn from the overseas experience. And what I'm urging you to do today is to make a commitment to your clients, to your team, and to your firm itself, that you will gear up to meet these challenges in 2020, so that you can proclaim to your clients that you are willing and able to assist them on this journey. And it is a journey. And for many of your clients, it will be quite daunting, because it virtually is making the first step towards being a public company. They will have external shareholders. They should have some external directors. And with that should come the concept of more accountability, because they've got investors in their company. I think out of this process, your clients will be very happy, because they will be far more comfortable staying with their accountants who have made a commitment to embark on a journey with them, to be able to supply a wider range of commercial services. And the other group that will be very happy will be your team, because they will be doing, as one young lady said to me a couple of years ago, real accountants' work. And they will be coming across some very interesting situations in helping clients to go through this process. And I suspect your firm will be happy, because there's significant fees that can be earned from this process. It's very difficult for your clients to arrange finance at present unless they fit clearly within the parameters that the banks have selected. Clients can avoid all of the complications relative to borrowing money by going through the crowdsourced funding equity raising process. They do have to offer ordinary shares to the investors. So it's not a loan they're getting from the investors. They transform from being an investor to becoming a shareholder. because they have to be allocated under the legislation, ordinary shares in the company. There is a separate shareholders register that has to be maintained for the crowdsource funding equity raising shareholders. Someone rang me the other day and said, how does the 50 shareholder limit work? Doesn't it operate anymore? It does. The 50 shareholder limit applies to capital that has been raised utilising Section 708 of the Corporations Act, and obviously includes the original people who started the company. And then the company will have a separate shareholders register, and a separate return has to be lodged with ASIC relative to the crowdsource funding equity raising shareholders. And a company could have a third register if they have allocated shares to employees. But all these shares then rank equally within the company. Companies can raise up to $5 million in a 12-month period. Now, I stress they don't have to raise the full $5 million. In fact, according to my research, only one company at this stage has raised $5 million. And in fact, they raised it in two separate tranches, 2.4 million and 2.6 million. And you can do that. There has been a capital raise of only $45,000 by one company. That's all they wanted to raise. And there's been raises of amounts like $250,000, $300,000, $400,000, $3 million. So it depends on the company's own circumstances. But the very important fact is that a company can raise up to $5 million as long as they've got the support of the public, who after all are the ones that are investing their money. So let's look at the crowdsource funding scorecard as at the end of October. $39.9 million has been raised by 55 companies from all around Australia, channeled through about 7 of the 15 intermediaries that have been appointed. And there's no mortgages, no personal guarantees, no monthly repayments of principal and interest involved in any of this for those companies. So let's just have a look at the form that relates to the shareholding that has been raised. And I'm just going to go to the summary of that. So this is a summary of the capital raising. I'll just show you the heading. This is the analysis that we have done, which incorporates the 12 months that private companies have been able to utilize it. We have listed the reference number. That's just our way of putting it into alphabetical order. The name of the intermediary, which is the organization that's been appointed by ASIC that makes sure that your client has complied with the law, that the crowdsource funding offer document has been appropriately prepared, and that all of the checks that and balances that the legislation requires have been abided by. But the intermediary then wears another hat, the commercial side of their operations. And they have each assembled their own databases of potential investors. And their websites claim that individual intermediaries have databases ranging from 20,000 potential investors to 50,000 potential investors. So the intermediary is making sure that your client, if you have submitted a client to them ready to raise capital, meets the legal requirements, but is also going to be of interest to the potential investors that they have in their database, because they're going to go to them and say, we think this is an interesting company for you to look at. So their professional reputation is on the line. So let's have a look. The performance of some of the intermediaries has been very good, and some others, well, then in cricketing terms, they're yet to open their score. And I think that gets back because they're not getting enough deal flow. And that's one of the real messages I want to convey to you today. The key advisor, the trusted advisor to small and medium-sized enterprises are people like you, accountants. I think you need to clearly understand the benefits that crowdsourced funding equity raising can bring to some of your clients and then talk to them about it. And I'm going to discuss that a bit further with you today. And then encourage them then to take the next step to start talking to an intermediary. You could assist them to select an intermediary because the intermediaries are all running separate businesses and they all have a variation to their approach as to how they are going to promote and market the company that they have agreed to take on. So let's just go through this. So what we've got here is the progressive capital raising, the completed fundraising and what's in progress. There was only one company in progress with Equitize, who had one company that at that stage had raised $157,000. And that deal was ongoing at the 30th of October. But through the summary, if we look down this column here, you'll see that Birchall in Melbourne had completed 25 transactions to raise $16 million. Crowd 88, 2 transactions, $1.1 million. The other top company was Equitize, 13 companies, 10.3 million, and so on. So they're the totals at the bottom. If you want to look at the individual performance of any of the intermediaries, this is Birchall that we've summarized as at the end of October. So what we include is a description as to the company, and we do have the company name on the left there. The pre-money valuation, the minimum target, the maximum target, the share price. Were there any other benefits? Some companies have benefits for the investors. The minimum investment amount, the progressive amount that had been raised, the time left. Well, obviously there was no time left. They're completed. What was the total amount? What was the percentage raised against target? How many days did it take to raise the capital? Bear in mind that the law says you have 90 days maximum. How many investors did they attract? What's the average investment? What was the fee percentage charged by the intermediary? What was the additional cash amount up front? And we've also then summarized what industry this particular company was from. So there's the names of the companies that I wasn't showing you there before. So that's all summarized, and that gives the total figures for Birchall. So hopefully that gives you an idea. You can view that full scorecard for each of the intermediaries on our website if you wish to go there. So we're back to the main screen now, and we'll continue. So your clients have been able to achieve that. Those companies there, that the 55 companies that have raised the $39.9 million have achieved all that with no mortgage, no personal guarantees or monthly repayments. They're very happy. Now, I think the performance has been below market expectations, but that's not the fault of those 55 companies. I think it presents a great opportunity for market savvy accountants to be talking to your clients, to get them into this process, to save them having to go about this borrowing money process. I admit it's not for everyone, But I think it's for a lot more than 55 companies around Australia. And that's the challenge. And the key advisors, the surveys after surveys indicate that at least 70% of the business community say that their trusted advisor is accountants. And that's why we're running these presentations, to give you an awareness of how all this operates and to show you that we have the tools to assist you to be able to offer these services. And hopefully you will be able to communicate with your clients, because I think you'll find that there's a lot more clients in your business than what you might think there is, who could be of interest in this process. Because many businesses do not seem to have any understanding. When I talk to small and medium-sized enterprise operators, they talk to me about crowdfunding when someone's had an accident and they need to raise money for medical bills or even a funeral. That's not crowdsource funding equity raising. This is about raising money for investment opportunities, and your investors receive shareholders. 2 of those intermediaries out of 15, 2 of them have generated 70% of the deal flow. Now, I know that both of those companies are very happy with the results, and why shouldn't they be? What's needed is more deal flow, more input, I think, from accountants to assist this process. There is an expectation in the industry that, just as what happened in the United Kingdom in particular, that it took 2 to 3 years for this market to really take off, that 2020 will be an improvement, a better year. So this is the opportunity to get your clients interested in this process, those who will meet the requirements. Clients need, though, to have an understanding of that these opportunities are available. And many of them will not really do anything unless you are seen to be proactive in talking about this, in giving them the opportunity to have a full and frank discussion with you without feeling intimidated. So I think you could do a lot to help your clients by familiarizing yourself with the crowdsource funding equity raising document, and utilize a document which we've prepared, which will help you identify the types of criteria that these clients are going to need. So I'm just going to go to that form now, so we can bring it up so you can have a look at it, and that will give you a better idea of what is available, and hopefully you will be able to use that with your client. So this is a form that's part of the ESS BIZTOOLS crowdsource funding product package. It's the eligibility matrix. First of all, we look at the legal requirements. Is the group turnover under 25 million? Gross value of assets under 25 million? Not listed on a stock exchange, not on an official money market. The company doesn't intend to just accumulate the cash. The legislation doesn't worry about age. I've had people telling me you've got to be under 3 years. No, that's not right. That applies to another new company, the early stage innovation company, but it doesn't apply to crowdsource funding. And there's no demarcation against any industry. So any industry in Australia, as long as there's not some other law that says that company cannot, or that business cannot act as a company or cannot raise money from the public, any company in Australia can raise capital. And I've listed here then some what we've called the 10 key characteristics. I accept, and so the intermediaries, these companies need something else going for them, other than turnover under $25 million, gross assets under 25 million, etc. They need a will to want to do something. And you will know your clients that want to do that. Those that are just plodding along to get to retirement age and probably will not be able to sell their businesses, they're not the companies that have been targeted. So have they got a turnover over $2 million and are wanting to scale up, wanting to take the company to a higher level? They want to have a $5 million turnover in the next 3 years. They're going to need cash to fund their investment in working capital because they'll have higher inventories, undoubtedly higher debtor balances. And they probably need to spend money in research and development, registering patents, hopefully, and perhaps some new capital expenditure on an expanded plant. Are they a fast-growing, ambitious business? I think they need that. Are they wanting to expand? Do they want to acquire another business? Has the CEO got a big, audacious idea that might seem a little bit strange, but if there was an injection of cash, could it all happen? That could be the key requirement for your client. And have they got some loans that they'd like to repay that might be mortgaged on someone's mother-in-law's home unit and she wants to sell and move on? Or have they got mum and dad loans and mum and dad needs the money to pay the fees to go into a retirement home or whatever? They need their money back. Is there a succession plan in process that you'd like to be able to change? So there's some of the items that you might think about in looking at that. And we'll just go back on now to our PowerPoint slides. So where do you stand as an accountant? Where do you start in all this process? I can hear you asking me, well, what have I got to do? I had a phone call yesterday from an accountant who was saying to me, well, where do I start in all this? I think number one, identify the clients that might be interested. And I'm very confident that in every accountancy business in Australia, there will be at least one of your clients that meets that criteria if you sit down and really think about it. So why don't you sit down with your team, with your managers, or bring everyone together and say, let's utilize this form, and this will come to you as part of the ESS BIZTOOLS product package, and identify the clients that we have that fill these requirements. And they've got turnovers under $25 million, that have got gross assets under $25 million, that are not listed on a stock exchange. And obviously the CEO, the board of directors, the leadership team have got to have ambitions and a vision. They want to go somewhere. They need to have a good business. And they also need a strong leadership team. They're going to be entrusted with $500,000, $1 million, $1.5 million, $5 million of investors' money. And on the figures so far, 74% of that will come from mum and dad retail investors. So we're trying to make sure that the leadership team will be able to use those funds wisely. So where do you start as an accountant? Go through and identify them and get the 2 or 3 or 10 or 20 or 50 of your clients. I'd be suggesting you have seminars, probably only 20 clients there at a time, and talk to them about this process. If you've got clients scattered all over Australia, you could present a webinar to them like we're doing now. Or you could have a one-on-one meeting. So you will know your clients. Some of your clients don't really like seminars and webinars. I know that. So go and have a talk to them, have a cup of coffee somewhere. And after the presentation, and the full presentation kit's contained within the ESS BIZTOOLS crowdsource funding product package, follow them up. Don't sit back and wait for the client to contact you. That's the old accountant's approach. We want you to be adopting new accountant's approach. The soft image. You pick up the telephone. Can I have a cup of coffee with you? Can we have a discussion? Conversation. Are you interested? Do you want some more information? Perhaps they want to bring their spouse and family members in for a discussion. This is a big decision for your clients. So follow them up, please. And identify the milestones. And all this is covered in our product package for you. You have only got to do the reading. And we'll take you through a training process. It's part of the package. So your client needs to understand that this is a journey. And so does your team. It's not all going to be done in 5 minutes. So you need to make sure that your client becomes familiar with what the intermediaries are. Who are they? Who are these mystical people? We've never had them in Australian commercial law before. What's their duties, their responsibilities, and their powers? And they do have some powers. They are the ASIC representatives. Someone rang me the other day and said, is there a prospectus for crowdsourced funding? I said, no, there's not, but there's a crowdsourced funding offer document, which is a toned down document as compared to a prospectus, but it does require various information, primarily on the director's history and the company's history, to be disclosed in the offer document, together with something about the company and what the journey is going to look like. And your client needs to understand how the listing process works, that the intermediaries are running their website, and on that, they have the listing for their business. And the public can basically go to that website for a maximum of 90 days and invest in the company. There has to be a 5 business day cooling off period once that investment is made, and then they are committed to be shareholders in the company. So that process needs to be explained to the company directors so they understand it. And then we have the key documents that are going to be required, because you won't be able to do this with a client unless there's a current business plan. Some of your clients may already have an appropriate business plan. Others will need the business plan to be prepared. They will need budgets and cash flow forecasts that are complementing the business plan, which really should be looking at the next 3 years. They need details of the corporate team. Who are the directors? Who's the leadership team? Where's the business operating? What's it do? What's its prospects? And details of the directors and officers. So then you can submit your proposal to your client. We can do this work for you. We can guide you through this process. We can introduce you to appropriate intermediaries. And people ring me, some accountants, and say, well, okay, what's the fees going to be? I think for guidance, an average of $25,000. But if a client's got none of that work already done, their business plan, budgets, corporate team sorted out, it could be in the vicinity of $40,000 to take them through the process, including the preparation of the crowdsourced funding offer document. Now that's going to be a fee payable probably over a 3-month period. It will probably take most clients around 3 months to get ready, unless they've already done everything first and just want you to review it. There's also the opportunity, I think, for you to supply some ongoing services as a virtual chief financial officer. Because many of these companies, having raised their $500,000 or $1 million or even $5 million, will probably not be too keen on appointing a full-time CFO. So this is your opportunity. And I think as a milestone, you could probably put in there that the fee could be around $50,000 per annum per client. Probably well worth you thinking about in your planning as to how you might look at this new market opportunity that the government's presented to you. I was an accountant for many years in practice, and at times I used to curse the tax office, but every so often would thank the tax office and the government, because with all the amendments in the legislation, more work was generated. You know, GST was a bonanza for accountants, wasn't it? Well, It's a little bit different, but the government's also laid this on for you, just that you've now got to take the initiative. This opportunity has all come about because the government put in place a package that will help small businesses and medium-sized enterprises to raise finance for their businesses. And they need your assistance to be able to do so. So are you prepared to claim this market and identify your strategy now for 2020? Help your clients, many of whom are probably having real problems with their finances at present, who could perhaps look at an alternative, crowdsource funding, equity raising. Or if you're going to sit wherever you currently are and you need to be aware of the top 100 accounting firm survey that the Financial Review has recently completed. The top firms are moving more and more into advisory work. But you have an advantage when it comes to crowdsource funding, equity raising, because I suspect the vast majority of clients or businesses that want to think about raising crowdsource funding, equity raising, at some stage in their business journey, have been the clients of small and medium-sized accountancy businesses situated all over Australia, not just in the big cities, but all over the place, because that's where they start. Now, they may have already moved because they felt an air of indifference within their then accountants to assisting them on this journey. This is the challenge for accountants. I think you should be making a commitment now, today, that you are going to be geared up to be offering chief financial officer services and crowdsource funding services from the start of 2020, as early as possible. So you could upgrade your website to incorporate articles on crowdsource funding, equity raising. How many articles on crowdsource funding, equity raising do you currently have on your website? Over the last 3 months, I've looked at hundreds of accountants' websites. I haven't found anyone talking about crowdsource funding, equity raising. Yet this is one of the greatest opportunities targeted at small business and medium-sized enterprises that's ever been on offer to the Australian accounting industry. Are you going to take up the challenge and claim this market? So why not distribute some promotional material to your clients and prospects? Because we all know that I'd be very lucky to get 5 to 10% of the Australian accounting industry really involved in this, because too many people are sitting on the sidelines, not making a commitment. They read all the reports and they know that more and more the clients are looking for an additional range of services, that you have to be proactive, that you have to develop the soft skills. Yet unfortunately, a lot of people do nothing about it. This is your opportunity. So you can distribute some promotional material to your clients and prospects. Where do you get it from? You're going to get it from the package that we hopefully are going to convince you to subscribe to. And you can commence a social media campaign targeted at clients and businesses, not only in your area, but all over Australia if you want to. Where do you get that material? We've included that in the product package that you could be a subscriber to. Are you prepared to get a reputation as the go-to accountants because you're familiar with the opportunities? Not only of crowdsource funding, equity raising, of course, but also on the early stage innovation companies, which is a separate product package, or on Section 708 capital raising. I'm quite surprised at the number of accountancy firms that really don't understand that process, but that's the subject of a separate webinar. Now, we can assist you in all this because we've developed a full range of products which we included in what we call the crowdsource funding equity raising product package. Gives you step-by-step forms templates, processes, drafts of what you need, training material for your own team, but also for you to then familiarize your client with what this process is all about. And we give you ongoing support, and we give you 1 hour advice at the very beginning of your process. Now, your investment is only $990, including GST, for the standalone package. That's on crowdsourced funding equity raising. Or you could subscribe for the total ESS BIZTOOLS package, which includes 22 other product packages: succession planning, business planning, personal property securities register, risk management, early stage innovation companies, and many others. You can subscribe for that total package for $2,970, including GST. That's the upfront discounted price. So now's the opportunity for you to make this what I think is basically a once in a generation opportunity for you to really gain a strong foothold in this whole process. We will be announcing shortly an accreditation process that we are working with the intermediaries organization, because they are critical of accountants and don't believe accountants can really deliver these services. Well, you use our product package, you will be able to deliver the services that are required to get your client into an investment ready status. So why not start it now? It's November, so you can get yourself ready during December and into January, so that from February 2020, you are well and truly in the marketplace, talking to your clients and helping them. If you need any more information, please go to our website, essbiztools.com.au, and then click on to Crowdsource Funding, Learn More. We've got a significant amount of information there. You can download whatever you want from that area to give you an overview. You can view the scorecard that I referred to earlier, and you can view the industry tag summary that we've prepared. So you can see the 36 industries that the companies that have already raised capital have come from, what they relate to. And that 36, I think, proves that you can raise capital no matter what your industry is in Australia, utilising crowdsourced funding equity raising. If you need more information, please send me an email, peter@essbiztools.com.au, or telephone me on 1800 232 088. Have a great day, and I look forward to hearing from you that your firm is taking up this challenge to supply a broader commercial range of services for your clients, starting with crowdsourced funding equity raising. Have a great day. Goodbye. And I look forward to talking to you all on our next webinar next week. Have a great day.